All right, Ken Range Trader with a video on the volume in the ATR, the ultimate breakout filter that most traders ignore. So the focus of this video is that we only want to trade pairs that have volume and momentum, okay, that support strong moves. We don't want to get caught up in any false breakouts, choppy price actions, etc., etc. So I'm going to show you how to put it on your chart, and we will go from there. So let's real quick go to Trading View. I have here a naked chart. And what you will do is you'll go up to indicators, you will type in volume, and it's simply volume. You'll tap that. These bars will appear on the screen. Now, just because they're red and green, ignore that. Okay, just focus on the size of the candles, not the color. Don't think that all the sellers are here and all the buyers are here. That's just not how you read it. Okay, so the only other thing you're going to want to do is go to the settings, and you will go to volume MA, and you will click that, and that will put a moving average on this indicator. I like to make it a little thicker, and I do like to make the candles a little more opaque as well. That's just me, but I mean, if you don't want to, if you don't have to. But that's that. And so our only focus is going to be candles that are above average, okay, above the average, this blue line here. That will tell us when there's above average volume, when we should be trading, and when there's no volume in the market, ideally we're either already in something and we're just letting it rock, or definitely not looking for any entries when the volume is not there. So that's how that goes. So let's go back to our presentation here. So we put it on the chart. Now we're going to evaluate first off narrow ranges with volume. How do we do that? So here's the mentality we need to have. When we're looking at a narrow range, okay, with the NR7 indicator, if there's low volume for the whole candle, now that's actually good, right? That means there's nice, tight compression, classic cleanup, okay, classic setup. If there's average volume, it's neutral, it's fine. But if there's high volume, lots of candles above average, we don't like to see that. Why? Because think of it this way. Low volume on the narrow range candle is the market's at rest. Like it's like it's resting before the move. If you see a lot of volume in a narrow range, that means that the market is arguing. You don't want to step in the middle of that. Okay, you like for the market to be nice and quiet and then have a nice clear breakout, and then that's when the volatility and volume comes. Okay, we don't like to see high volume narrow ranges. Doesn't mean they'll never work. It's just we want to put the odds in our favor as best we can. So all charts that I'm going to show you on this presentation are 15 minutes. So here we go. Let's evaluate the narrow range. So we have here our narrow range indicator right here. This is Friday's price action, right? Narrow range Friday from 1700 or 5 p.m., 5 to 5. So we notice here, look at the volume at the bottom. See how most of the candles here are below the blue line, below average, right? There is a slight spike at the end of the day, but don't let it, for the majority of the day, it was a very quiet day. And look at what happened. Nice, calm 90 pip drop. Okay. Notice with the spikes in volume coming in through Monday. Monday saw a higher volume. Tuesday saw higher than average volume. And Wednesday had a little bit of a higher than average volume as well, right? Because of a result of this nice quiet day on Friday. All right. So the market was at rest, then decided to move. That's all we're looking for. Okay. So first off, we need to evaluate NR7 candles. What do we look for next? Another low volatility candle right here for a narrow range from a Tuesday. Again, we're not trading in here. There's no volume. Price didn't really do anything. But then look at what happened here. 79 pip rise. Okay, it shot up, it broke out, retraced, and then broke out again, right? So this would have been a wild ride. You could have caught this to the upside and this to the upside. So you could have got two good long plays here, and also here. Okay, but again, it's as a result of a nice quiet range, and then see how the volume picked up on Wednesday and definitely picked up on Friday. But until then, the market was quiet. All right. Now, how do we evaluate narrow range breakouts in real time? If you don't get anything else out of this video, get this. Okay. When the break happens and the volume spike is above the moving average on the volume indicator, that is the best thing you're going to want to see. If a candle breaks out of the narrow range, but it's the volume is like right at the moving average or it's smaller, you want to be careful. Okay, maybe not take such a big position, maybe take a small entry or just not even take it at all. If price breaks out of the narrow range and the volume bar is below the moving average, you can wait a couple bars to see if the volume does pick up or just skip it altogether. Right? And then when the volume starts to fade, you can tighten your stop loss or you can take partial profits. And if there's low volume on the narrow range candle itself, again, that's a good sign. We went over that because the compression is real. So here's how to read that. So this is how you stop falling for a lot of fake breakouts, me included. Okay. So this is the dollar yen. Here's the breakout candle right here. This green candle broke above this range right here. Okay. But notice the candle down here is barely above the moving average right there. That's weak. Yes, the preceding candles did come up forward a little bit, but then it went right back down, right underneath it. We don't want to see that, right? There's no volume here. And as we can see, anybody who went long here, it didn't work out for them. And even when volume did pick up, by that time, price was already dropping. Yeah, there was volume to the downside. Okay. But don't get it twisted. Okay. I don't want you to misunderstand. This volume indicator is not a indication of direction. It's just telling you if there are more than average price action. That's all. Okay. But it's not going to tell you which way price is going. So please don't think that. All right. So once again, this is a weak breakout because the volume just wasn't there when it happened. All right. And by the time you don't want to see this, the opposite. Okay. Volume picks up, but the price is going against you. That's not it. All right. We want to see them working together. Here's another trade here on pound Canadian. So the price broke out of the narrow range back here, right here, broke down. So a lot of people, of course, went short, expecting price to continue to drop. Look at the volume here, below average. Do not short these. As we can see, price came right back up. And same type of situation. By the time the volume did kind of pick up a little bit, it was going against the traders who went short. All right. So what do we want to see? This strong breakout below the range. And where is our volume? It's already above average. And as it picks up, see how the volume picks up here and then price just continues in our direction. That's what you want to see right there. Right? Strong breakout on volume. Strong breakout on volume. Right? No volume, no trade. That needs to be on our mantra here moving forward. Okay? Once again, narrow range, breakout. Look at the size of that candle right there. Way above average. Okay, strong breakout on volume. What happens next? Price continues to go to the downside. That's what we like to see. Now, I wanted to include this example, though, because nothing's 100%. We have a narrow range, strong breakout on volume. We have another big candle right here that's way above average. But then what happens? Everybody who went long, that was a loser. Okay, so one way to keep the loss small when this happens, typically on a legit breakout, typically price does not retrace back into the range. It normally breaks out and keeps going. All right. And then the same thing happened here. Breakout, strong breakout on volume to the downside. But then what did price do? Came right back into the range. So this is just a whipsaw day where it got some longs, got some shorts, came right back into the range. Nobody made money really. Okay. So next up, we have volume and the average true range. This is the missing piece. Now, context matters when the breakout happens because typically a spike during London is better than a spike during Asia in terms of a breakout. Okay. And a spike during New York and London, that overlap is going to have more volume or more weight than a spike in Asia as well. Okay. So remember that you have the ATR, or what's called the average true range, and that can work with volume to give you a second volatility read, meaning that if the ATR is rising and volume is also rising, that's a strong confirmation that the market is really moving. If the ATR stays flat, just be a little more cautious. So what does that mean? Well, first off, let's put it on the chart and we'll show you how that looks. So we have our chart right here. You go to indicators, you'll just type in ATR, average true range, bang, that's right there. And this, again, neither of these are trend indicators, all right? This just tells you how many pips the pair is moving on the time frame you're in. So currently for Aussie New Zealand, it moves about 5 pips every 15 minutes. That's it. That's all that means. But what we like to see, and it's actually doing it right now, so that's actually good. Now, I'm not saying we need to trade this, but all I'm saying is this. See how the volume, the price action is above average, and the average true range is also rising. That means the market's actually moving. But that's it. Doesn't mean it's moving up. It just means it's moving. Okay, so don't think this is going to tell you the trend. It does not do that. It's like a ruler, but it measures both sides. It measures long and short. So please don't get confused when I talk about these things and you throw them on the chart. You're thinking, oh, this line's going up and this line's going up, so I need to buy. No. All that means is the market is moving and there are participants. It's above average in terms of volume. That's all that means. Okay, so that's that. So let's keep going. Let's see. So another tip, like I said, allow the slight lag on the entry. Sometimes the spike doesn't come in terms of volume for 1 to 2 candles after the initial break, but typically, as far as I've seen, it happens on the breakout candle. Okay, but if you want to give it a candle or two, which in this case would be 15 to 30 minutes, that's fine. But if there's no volume within 15 to 30 minutes, I would consider it a weak breakout and just look for something else. All right. So these are the four combinations when it comes to looking at your volume and your ATR. If the volume is above average, so above that moving average on the bottom and rising, that's a strong entry confirmation, like I just showed you on the chart we just came from. Okay. Now, if the volume is above average, but the ATR is flat, it could be a potential fake out, or people are just participating, but there's no real strong movement. Now, if the volume is below average, but the ATR is going up, the range is expanding, but there's no real conviction behind it, so it's kind of a thin move. And if the volume is not there and the ATR is flat, that's what you'll typically see in Asia. You have no business entering any trades when both there's no volume and the average true range is real low. So the top scenario is what you're hunting for. That's where your odds the best. All right. It's also worth noting that these don't need to be extreme. You just need them move in the right direction together. Okay. A moderate volume spike with a rising ATR beats a massive volume spike with a flat ATR every single time. So they work together in conjunction. Okay. So here is an A+ checklist. If you want to take a picture of this, screenshot, do whatever, I don't care. So here's how I filter my trades. Okay. Or breakouts at least. First thing we need to see, obviously, is an NR7 or NR4. NR7s are typically better. The volume on the NR7 needs to be low to moderate. Okay, no high volume, narrow ranges. Okay, we like for it to be nice and calm because we want to see the move later on. The NR7 candle ATR should be low or at or near a low. What does that mean? Let me see. I think I had one earlier. Okay, like right here. See how this is flat? It's not very high. The ATR, this red line right here, like that. You don't want to see the ATR at highs. You like to see it low and eventually pick up momentum. You want to see the average go higher, ideally in your direction. I know this wasn't a good trade, but it's just the first one that popped up that I could think of that had the ATR on it. Okay, so that's what you want to see. And some more examples will be coming up too. I know it says here the narrow range can also be an inside bar. Don't worry about that. If you want to use a trend filter, you can. You can use something like a 200 or a 50 EMA, 200 EMA. So, if you want to go long, as long as the 50 is below the 200, you go long. Vice versa. If the 50 is below the 200, you buy short breakouts. Either way. You want to try to trade London or New York session. And then, of course, you trade in the direction of the breakout, long or short, in line with the trend. And the breakout volume has to spike above the moving average on that volume indicator, and the breakout ATR needs to be going up, okay, and alongside in conjunction with the volume spike, okay. So this is a perfect breakout short. Let's put everything together. Now, first off here, in terms of our narrow range, okay, we look at the narrow range. It does have some slightly high volume. I will admit that. Okay, so we can say that's kind of like a moderate. Had a little spike here, but then it did calm back down near the end of the day. That's fine. Okay, so next, we noticed the average true range it was at a low. Okay, it was at a low. It did start picking up a little bit, but then it evened out. Now, trend filter was going to be on the next slide. So I'll show you that next. Okay, the session was New York because time of day can be important. This was around an 11 o'clock hour where price did break out. Now, what do we notice around the time of the breakout? Look at the volume. It's above average. Okay, so there's volume here, which means we have market participation. We notice as well the average true range has been rising, so that means there's volatility in the market. That's what we're looking for. And then what do we have? A nice clean downtrend. All right. I wish I measured this. I don't recall how far it went, but might be on the next slide. I don't know. No, I didn't. I didn't measure it. But either way, okay, you see a real nice long trend. Fair value gaps being created as well. And in terms of the trend filter, like I said, this green line is the 200 EMA and this blue line is the 50 EMA. So we can read this as a technical downtrend. So if it's a technical downtrend, we only trade short breakouts. But do you need a trend filter? Not really. But can it help? Yeah, sure. Why not? Okay, if you just want to use the 50, that's fine. If you just want to use the 200, that's fine. If you want to use something else, that's fine too. It's up to you. All right, so let's look at a perfect long breakout. That was a perfect short. We'll take a look at the long. So we have our narrow range right here. Okay, let's check the volume. Volume was pretty calm, moderate to calm action, nothing too crazy. The ATR was at a low, so it's good, nice and quiet. Okay, because remember, if the narrow range ATR is at a low, we want to see it rise with our breakout. Okay, from low averages to higher averages. That's what we hope to see. Okay, now where was the trend filter? That'll be on the next slide. The session was at 3 a.m., so it came a little later because I know the initial breakout was right here. This was actually in Asia though. But here's what you can do. If you miss the initial breakout, or if the initial breakout happens in Asia, what you want to do is wait to see if price will retrace back into a decent range, or maybe give you another opportunity. Could be on the next day. It's up to you. But ideally, you want to look for possibly maybe a fair value gap, something off the low of the day. It might bounce off the daily open price, a swing high, swing low, change state of delivery, a close above the 50, close above the 200 EMA. Just try to figure out what you want your entry signal to be. But notice that when you enter, we see here that the market has volume. See right here in this area right here where the entry is, there is volume. Volume is present, so we like that. All right, so we enter. And then price obviously went up. Now I did have the measurement in this one. This was 182 pip rise during this London session trade. This was a no drawdown trade, straight into profit. I think over a couple days. Okay. I like it when breakouts last about 2 to 3 days. So this would have been like day 1, day 2, day 3. Anything past day 3 for a breakout, it's not top of my list. Okay. So that's that. Here's the trending thing here, trending chart. So this was the 50 above the 200. So that's a technical long trend. That's the initial breakout right there. And like I said, bounce off the 50 EMA could have been an entry signal right here, or bounce off this fair value gap. You just have to make up your own entry signal and go from there. So that's it. And then price just continue to rise. So 182 pips right there, pretty easy to see. So final tips, you want to skip low volume breakouts. Okay, just because price breaks out of a range doesn't mean we need to enter. Sometimes the volume will be low, but the breakout will still work. It is what it is. Just focus on the winners. You can allow 1 to 2 candles to see if the volume's going to spike. But if it doesn't, if there's no volume in that trade, just forget about it. Try to find where the action is and trade that. Trending breakouts can give you the highest odds, but nothing is guaranteed. So remember to manage risk. Like we just saw on this chart, right? Let me see the whipsaw chart here. Yeah, this is the one. I don't know what the trend was in relation to the 50 and 200 EMA, but maybe something like that. Let's just say, for example, if the trend was short, you may have just taken one loss right here, but you wouldn't have taken the loss over here because your trend would have been short. And typically you only want to trade in the direction of your trend. So that's what I mean when I say a trending filter can help you. So that's that. Let's go back. Let's see. The best thing to see, remember, is high volume and a rising average true range. And sometimes it's about eliminating losing trades, not finding more trading opportunities. Okay. So if you want to get aggressive on those, these are the trades right here that it's okay to, scale in on, right here, because you got everything came together, the volume, the trend, the ATR, it all comes together. Now it can still all come together and you can lose. So you just keep your losses small. And as long as your losses are smaller than your winners, then you'll be fine. So definitely back test, experiment with that. Hope you got some value out of it. But remember, no volume, no trade. We want volume on our breakouts. Okay, above average volume on our breakouts, if nothing else. So I appreciate you watching. Hope you have a great rest of your day. Don't forget to like and subscribe, and take care.